Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Monday, January 31st, 2022. And I wanted to cover some of the other recently highlighted trade ideas, various commodities, and precious metals. We'll look at wheat, corn, sugar, lumber, Bitcoin, gold, silver, the euro. I'm just going to start out here. I already did a pretty extensive update on the equity markets, but what I didn't cover there were the futures, so I wanted to get the chart out. I know a lot of you guys trade, a lot of you guys and gals trade NQ and maybe ES or RTY or any of the other stock index futures. Most important right now is we have NQ. This is NQ, the NASDAQ 100 futures. I've got fibs from here. I used this second reaction high just because we had some consolidation there. You could put the fibs a bit higher back here. That was the high back in mid-November, and then we made a slightly lower high. Either way, if you did that, you're just going to raise the fibs. I'm talking the entire move down into last week's lows. That's just going to raise that line ever so slightly because that high was above that one. Where we're at, I don't know if you can make it out here, but these are the fib lines, and I also already had some horizontal support and resistance levels on the charts. So right here this is the 38, the big 38.2%. That's typically, generally about a minimum for a retracement when you have a counter trend rally, is at 32 fib. I covered that this morning with QQQ, and up here is a 61.8. Now I also have a price resistance level right there as well. So point is, this is resistance. This is the first really good resistance all day in NQ, and that's that previous reaction high. You had this move down, little flagging action there. That was the top of the flag, and then another leg down. You also had some reactions back here in the past off that level as well. So I just want to mention price resistance. Then you have also price resistance and the key 50% fib right up here around 15,179 right there, and then a really big level here at the 61.8. And again, these were levels, you can see it's a little blurry because my price levels overlap with those fibs almost perfectly, and that's and it also, the fibs, those are the levels that I'll typically look for in a counter trend rally, anywhere from that 38 up to the 61.8, and you can see, and that coincides with the bounce target range that I gave you earlier for anywhere from here all the way up there. It's roughly, we'll call it about 15,500, somewhere in that area there, and or where we're at right now, and that's about 14,838. I've told you also that last week the 5-minute chart has just been a dream for actively or day trading short-term trades with NQ or QQQ. This is QQQ. You had a lot going on here. You had, first of all, and this is worth noting, we do now have a series of higher highs in the very near term. So the way I talked about today, the long-term trend still being bullish, the intermediate term trend bearish because we're down since November, mid-November was the peak in QQQ, but then the very near term trend is now bullish. Should acknowledge that we have a series of so far higher lows here, and now with today another higher high. So very near term again, that's the bullish trend. So this is something to watch, of course, that to see this previous low get taken out or the next major reaction high. We have one right here, and we're coming up on it now. So I wanted to point that out. So here's what I see on the 5-minute chart. We had first, well, way back here, start over, we had a little steep little bullish falling wedge. I highlighted that last week. Then we had a secondary downtrend line there. So you had breakout, buy signal one, breakout there. You had a lot going on here. You can see all the little micro trend lines and divergences and all that led to this. So most recently here, just wanted to kind of update from a 5-minute what we're looking at here. We had a bullish falling wedge there with nice divergence. Again, 5-minute chart of QQQ. You broke out. There was your breakout right there. You came in and then you hit this larger downtrend line. Traded under it for a few days, or I'm sorry, this is just 5-minute chart. That was just a half a day there. Then a breakout right here. Now we've come, pretty full circle. We haven't had until now negative divergence. So that's what I wanted to point out to you. Here's 362 It's not a huge level, but it's decent. I'll show you why. You can see the obviously the reaction high, that previous reaction high right there, right here. And you can also see, or you'll see soon, about to see a big old thin zone at the volume of price histogram right there, and that shows you right here. This thin zone is similar to a gap. You had very few trades down through that level, and so it kind of works like a gap where the top of that thin zone is up there around 369. So if we happen to pop this level, we could easily do that and still have the divergence depending on how it plays out. So that is, if we don't turn down here, I would look for a turn down there, and it might look something like this. I'm just drawing, I'm extending out these divergences like that. Should it happen without too much of a pullback, but resistance is resistance, so we'll watch and see what happens here, see if we can get through there. And as I mentioned, or I didn't mention it, but I will right now, that 60-minute chart I started with is more significant. Anytime I'm trading multiple, and I always look at multiple time frames when I trade, but those with the longer time frames, those resistance levels and trend lines and chart patterns, they take precedence, or they have a higher weighting over the what's going on the shorter term chart. So that's that 60-minute chart being at resistance supersedes anything here, although we also have QQQ at resistance. I just want to mention there's also, if we pop it, it's more minor. There's bigger resistance, about almost 2% overhead. And that also meshes with, those fibs and potential bounce targets covered both today and last week. So based on all that, like I said earlier today, my expectation will probably see a fade into the close today. I think we'll see some profit taken on this bounce. So if you're, again, an active trader, you could short the Qs here with a stop right there, and either cover on a pullback to that 354-ish support right there. There's even minor support there. You want a quick trade, and again, if you're not an active trader, you won't know what I'm talking about here, but even a drop, that's about a 1.25% drop right there, a little over 1%, 1.16, which would be a healthy pullback trade for if you're trading NQs. Okay, quick update on the commodities. I mentioned wheat, corn, some others earlier. There's your primary uptrend line in wheat. There's your divergence line, the most recent big old divergent high right there. Been stair-stepping lower, took out that secondary trend line. All these levels were highlighted in the past, and then back tested that trend line there, and we're coming up on that key $7 support and the trend line, which is still a downside target. That's the ETN. If you want to trade futures, this is what it looks like here. ZW are your wheat futures, and you have a nice clean trend line that was taken out recently, or today, or yeah, I think that was earlier today. Let me tell you. Nope, that was Friday. A little snapback rally today, but another impulsive leg down, and that came after this divergent high. So basically, you can see the negative divergence. You had a divergent high there, and led to that drop, followed by a big divergent low there that was a catalyst for this rally. Divergent high right there, catalyst for that drop. Big divergent high back here. I'm sorry, divergent low, and so forth and so on. So looking at this chart here, probably get some minor support coming into play here, about 750 right there. But I think we can work our way down closer to this target here, about 730. I have it about 733.295 up to about 730, 740 or so. Near-term target on wheat. And if that gets taken out, that's pretty good support. We could go down there. But again, watch that chart of WEAT, because there's a lot of money, a lot of retail money been flowing into commodities, I assume. Now that the cat's out of the bag about inflation, I think we've seen rotation, and commodities continue to hold up, even recently, despite the sell from the market. So that would be an area to maybe position back in for a long-term trade if we get a move down there. The other one that tends to move with wheat often is corn. They're not, it's not a one-to-one correlation, but it's fairly positive because they're competing grains, and that is ZC. I'm going to cue it up here. ZC. So this is what it looks like on ZC. This is a hourly chart. I believe we were just looking at a 2-hour period chart. Every candlestick on that wheat chart was 2 hours, 120 minutes. But on ZC, you have this. We've been building divergence. We had divergence there, had a sharp sell-off, but this uptrend line has formed, and now it's just been taken out. And you also had a little minor support level there as well, which was taken out. So that opens the door for a healthy pullback in wheat. I had targets from before. I'm going to give you, I'm sorry, corn. I'm going to give you one more target I can see right here, about 615, 940. You have a reaction high there, a couple reactions there from below, reaction from above right there. So about 615, 940. And then I think we can come on back down here at about 597, 300. Okay, I told you earlier today when I did the video, and it's since panned out, that probably time to cover up the short on sugar. This one has just literally been an ATM for printing money. Highlighted back here somewhere. It started picking up, some several things in the charts that have just worked out so well. Number one, on the RSI, you have a level I have at 20 point. Well, it's 20.098 to be exact, but right around 20. That's pretty much the buy zone when wheat falls to that level. I'm just going to do the quick circles. You can see what it did, especially when you had divergence. We didn't hit it on the first, we hit it right here was the hit. So if you would have stepped in and covered a short or went long wheat on each of these, including today and this one here, you did good. And that in itself is super simple. It doesn't get easier than that. Likewise, I give you a line here at 86,275. You don't always get there, but if you do, that's usually the end of the rallies there. So again, that in itself is super easy. Then I also use the PPO. Now, it doesn't always get down to this level here. I have it at negative 1.2, but when it does, same thing. You want to step in and buy wheat. But you also look at the crossovers. That's these red lines that I have here. The white lines were your buys, bullish crossovers down low level PPO crossovers, even when you get them below the zero line. But up top, it seems to be about right here as your line, and you look for the bearish PPO crossovers. That's when that orange line crosses down below the white line. So let me clear all the other lines out so it's not confusing. And there it is. So you had one, oops, let's do it here. You had one right here, and that, then another one there, and then that, and another one there, and then that, another one there. You get it. So anyways, some of these were bigger than others. And again, this is swing trading right here. This is not investing. This isn't trend trading. This is the epitome of swing trading. That was highlighted to you last time we had that one there, crossover. And even when the line started to turn down, you can almost anticipate. And you can. It's a little premature, but this one you had the crossover as well as a nice clean uptrend line break. All the better when you can get a sell signal with a break of support or a buy signal with a break of resistance. Now look at what we have. PPO has turned up. I don't know if you can see it in the video, but you can pull this chart yourself. It's a 2-hour, 120-minute chart of sugar, SB. And you hit the RSI level. Big reversal candle, big bullish engulfing. And now a downtrend line that hasn't yet been taken out, but most likely will. And so that's it. So anyway, like I said earlier today, time to cover that short. And you can either go long or wait for the signal if you want to be safe. And SGG or CANE, those are your ETFs for sugar, and that's how that looks. So you can see we're back to minor support, but then bigger picture on cane, at least we broke this uptrend line and hit that 880 level. So you can be careful on the long side right now because the primary trend line here was broken. There could be more downside. So whether we want to take it or not, trade that pattern I showed you on the 120-minute chart until it stops working. Let's cover lumber. Yep, I said I would cover lumber futures, and that's LB. Okay, this is lumber futures, the March contract. We're looking at a 120-minute chart with 2-hour candles. The 60-minute would look almost identical. There's your bearish rising wedge right there, highlighted here, and the sell signal came right there. It fell into Friday's lows about 26%, and it made a slight overshoot of that 988.90-ish target. We'll call it 989. Got a quick bounce off there, but I think that's over, and we'll probably have another leg down now. This was a little bit of flagging action. So if we can break down through the recent lows, we'll hit my final target here, which is 860, about 862 up to 895. It's a zone, it's tight target zone. That flag could actually throw you down through there even more. That's the nature of lumber. So I just wanted to update. The bounce came because we were oversold. And get that oversold, you usually get at least a bounce. That's what happened right here. You get a bounce and then another leg down. So that is lumber for you. And next up would be, let me cover Bitcoin. I haven't covered that in a while. A few weeks back, maybe 3 weeks ago, 4 weeks ago, started highlighting some levels on the 60-minute chart and even daily charts that should have held, and they were buy zones, and we went down through those. We took those out. I'm going to add it back. It's right about here because it's still significant. That was right there. So we went down. Let me show you where we're at. So this is my 2-year chart. Let me go down, make this, let's go about 18 months of history, and that'll, you'll be able to see everything a little better. Okay, here we go. All right, so as you can see here, this is a 18-month daily candlesticks. Back here, you had a big divergent high, negative divergence, and a big correction that followed. Took us all the way down to this level. And this is what I'm watching, 30,361. These are Bitcoin futures again. That symbol is BRR. You can also trade the micro contract, which just has a smaller leverage factor. I think it's MBT, I think, if I'm not mistaken. Yeah, MBT is the ticker for micro Bitcoin contracts. And so there was it. Positive divergence there. You broke out of that bullish falling wedge. Negative divergence. So this was our divergent high right here, just like this one up here. That one took us down to 360, 361 before. It was great support because it was tested for months there. And then and that's where we're at. This was the level I stepped in. That was my preferred buy zone. I believe that was at 41. I know it wasn't too long ago. And we went on down through there. It's still a significant level. So if we can regain it, and here's the thing, you have a nice clean downtrend line. A little bit of maybe a flagging action. We may or may not get down there to that 33.61, and even if we do, it may or may not hold. Well, you can see here I drew. What we don't have is divergence, but if we can get a little pop up, we could put in a divergent low if and when we got there. So this is something I'm looking for. Potential pullback to 33.61. It's going to be really nice support. A lot of eyes are going to see that one. And if we can get divergence, all the better. And then ultimately, if we can go on to break this trend line. Now, it's possible we don't go all the way there. So if we can pop back above 41.040 right there and the downtrend line, that could also be the catalyst for rally. Maybe we come in and back test. And if we work our way down there, I just wanted to update the levels, give you the levels. Right now, maybe a stand aside thing. It's, I can't make a strong case to be in it or out of it. There's a little gap right here as well, and some price support. So I just wanted to add that. See that gap back here from looks like August, and then we had some reactions around there as well. So that's what so far has contained the pullback in Bitcoin. So we'll keep an eye on that one. Gold. Okay, I like what's going on in gold. Because I'm, talking now for the longer term case. I wear a lot of hats. Active trading mode. I'll go over the short-term charts, but on the weekly, I think sentiment, it just feels. I haven't seen any polls or anything, but it seems like with the, with the recent Fed meeting and the big surge in the dollar and the drop in the euro, that gave that correction, which was priced in on the 60-minute chart with divergence. Gold's been weak. It had one of the worst months in a while. or worse week, and I think maybe it was a bad week, I read. But here's the bigger picture. This is gold still in a bull market. There's by all metrics, this bull market started way back in December of 15. We're way up there. This is where gold bottomed December 15, hit that high here. I warned of a correction at that point in time. It was up about 80, 90% in the bull market, and it's pulled back, but it's still up about 70% off the bull market low back in 2015. And look, you can't say with certainty it's in a bull market that's going to continue. It's still in a bull market now. It hasn't dropped or retraced enough of this whole move yet. But this is where I think it'll really shine if we can break out of this triangle pattern right here, and of course then go on to break out above the previous high. Obviously a downside break, especially because I'm on a weekly chart, especially a solid weekly break below. Is going to be bearish, certainly, unless that just proves to be a whipsaw. But if it happens, take it for what it is. You can always get back in if you stop out. But if you're bullish, this is what you want to see. And look, here's the thing. Triangles, that's the nature of a triangle. Makes people give up. Though it shakes out weak-handed longs, makes a lot of bearish sentiment. People probably have gold written off. So all I'm saying is we're getting close to the apex of the triangle. Usually you break around this point. You usually don't go all the way into the very end of the apex. So gold's going to break one way or the other soon. What's going to determine where it goes? Well, the euro, US dollar. Remember, speaking of triangle patterns, I showed you recently we had a big one on the daily chart, and we broke it. We had a primary downtrend line with this uptrend line here that was broken, right? So, and that's where you get that waterfall drop. It coincided with the FOMC meeting. But look what happened since then. And I pointed this out the other day. We had divergence building, and that divergence, if the PPO is starting to curl up, it hasn't made a bullish cross. If it does, that is going to be what I call confirmed divergence. Right now, it's potential divergence because the PPO is headed lower. It could take that divergence out. But as of now, it's getting close. PPO again is crossing over. Look at that big reversal in here. So this is what I'm watching. Here's a divergent low right now, potential divergent low in the euro. We had one there. We got a rally. It didn't go very far, but sometimes they do go far. And so I'm just pointing out what I see. That's what the euro looks like. E7 euro futures. That's a daily chart, by the way. E7 on the futures. 2 years. This is 2-year daily candles. Here's what I'd watch. You see all these reactions here. 1, 2, 3. There were several there for. That comes across. That's the support level we just hit. So again, what I see at this point in time in the euro here, you can see the PPO curling up. Hasn't yet made a bullish cross, but there it is. It gives you have a short-term downtrend line. A pop above that could cause a rally. You also have the primary downtrend line right there. And then there was that line that was broken that I had, the triangle on the daily. So we can look for that as potential resistance. If we can get back above that trend line and especially break out of this primary downtrend line, then that's going to help the case for gold. And these would be your first couple targets there and there. Rough target. And silver, nothing new. Silver's still at that big 22,313 support right there, but this is the biggest support right here, 21,484. On silver futures, that is. You're looking at a 6-month, 2-hour candle chart. Steep downtrend line that was just taken out. Let me look at SLV for you, the ETF that tracks silver. Let's grab that and queue up SLV. And let's look at the weekly chart. So it's going to follow gold's lead. What I would add here is probably a little trend line there. All I can tell you is you have this divergence right there, positive divergence at that most recent low on silver. And this support level I've had here forever and a day, 2072. It's big support. Silver continues to defend that. 1, 2, multiple reactions. There was an intra-week break. Remember, weekly candle. That's why you don't jump the gun. You wait to see how the week closes. It snapped back above there. There's 1, 2, 3, 4, 5 consecutive weeks. Silver successfully defended that on the weekly basis. And there's 2 back here. And then you can see recently right there. And it's had some intra-week spikes below, and that's just given us this wedge type pattern. So there's the technical posture. Still seems constructive in my opinion for gold and silver. And of course you want to see silver ultimately get up above about that 20s, over these recent highs right there, and then that's when it should really be clear to all that this was just high level bull market consolidation. Okay, I started with a brief update on the equity markets. I'll just end it there. Remember from earlier video today, we still have on the weekly, that flag still looks very much intact. And T1, 342-ish, still remains key support if and when taken out. The recent lows going to take us down to my next target. And started out on that 5-minute chart showing you we were at resistance with negative divergence. And so far, pretty impulsive little rejection. You can even use these micro trend lines like that and see how it broke that level. And so pretty impulsive. And again, I was, still expecting a end of session dump, some profit taken after the move in the last couple days. If we get it, you have this reaction high to look at. If they start buying it up real quick, again, there's some potential for upside. My convictions aren't super high, and how could anybody's be? You still have a mountain of overhead resistance, and we're right now, if you look at kind of the near-term picture, we're just chopping around here, consolidating, and that's the nature. This whole thing here really represents that flag on the weekly and daily charts there. So you can try to game the little micro squiggles, or you can stand aside as a swing and trend trader and stick to your plan. And if you are bearish, you short push rallies back into resistance, such as this one or that next one, or the 200-day moving averages that SPY just hit. And if you're bullish, same thing. You got in. You have plenty of levels here to buy, and you have your stops either below your wherever your entry is, and you can periodically raise it. If you think that the worst is over and we're heading to new highs, just raise those stops periodically to assure at least a break even or a profit on the trade and let it run. All right, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.